Major developments are underway in the uranium space. But before we get started though, nothing in this video is financial advice. I'm not a financial advisor. Do your own due diligence. It's your money, your responsibility. With that said, let's go ahead and dive into some price action. This is URNM on the dailies, and as we can see here, coming off a fresh breakout from this year-long resistance line, we have retested and seem to be going back down beneath the resistance line. Now, are we gonna retest all the way down to this support line, or are we gonna bounce back up from this resistance line? Let me know in the comments what you guys think, but we had a pretty violent run up over the last month or so from December 22nd up until February 3rd. We saw a 30% rise in the URNM price, the broad uranium miners ETF. And since then, we've kind of consolidated down and are retesting this resistance line. Now, you can kind of redraw this resistance line another way. The way I have it drawn is to take advantage of the fact that, you not only hit two of these peaks, but you actually go through all three of these peaks here. Now, we can redraw this resistance line, like this, and you would have, boom, 1, 2, 3. And if you draw it like that, it looks like we hit our heads on this resistance line. Now that doesn't mean we've been, just because we've been denied for this first round doesn't mean that we won't inevitably break it. But we could consolidate back down as well. All of this stuff, nothing is certain. This kind of stuff deals with probabilities. Now let's move on to the metals price, and this is the reason why I think that the miners might still have some headway ahead, because the metals price has been breaking out of their squeezing pattern. We had this near-term top on April of 2022 and have been trending down since then. But at the same time, we've been hitting our heads on the support line for a while now as well, forming this squeezing pattern that we can see here, similar to the one we had from September of 2021 all the way out to February, and we saw what happened there. So is the same thing about to happen here as it happened back last year? Are we about to violently rip to the upside? Last year, we went from $43 all the way up to $64. That's about a 50% jump in the uranium spot price. Now, again, we could see a retest back down like we saw with URNM. So, we'll keep an eye on it. URNM versus the metal itself, uranium metal. So the miners versus the futures price of uranium. And as you can see here, again, we see the same squeezing pattern. We've been hitting our heads on this resistance line all the way from August up until present day, or about a couple weeks ago. And we've broken out of it substantially, but we do have a couple pretty strong red candlesticks. Guys, these are some pretty strong red candlesticks. We might come back down and retest, so don't be surprised. So the miners might underperform the metal in the near term. And why is this relevant? Because when the miners outperform the metal, that's indicative of a price hike, a price run to the upside in the metals price, in the uranium futures price. And the opposite portends to a run down on the metals price. So we actually want the miners to outperform the metal, because that means that investors are anticipating a rise up in the metal. So on other news, Sprott has just released URNJ. Yes, you heard that right. Another uranium ETF, this time solely focused on the juniors in the space. You can see here we've got all of the different companies that the ETF has holdings in. Paladin being the largest one here, followed by UEC, NextGen, UUU, otherwise known as Energy Fuels, Denizen, Boss. You guys can kind of read through this here. And basically the breakdown is for medium-sized market cap companies, you're looking at about 11% of all the holdings in general. And that accounts for all your $2 to $10 billion market cap companies. And then anything beneath the 2 billion market cap threshold, well, that's the remaining 88% or so. So this is intended to be a smaller cap ETF on the mining sector of uranium to kind of complement the URNM ETF. So this was just released this week. We only have a couple days worth of data to kind of look at, but yeah, URNJ, is this the sign of a top in the uranium space? Because a lot of people like to bring up the fact that, with some of these ETFs, like in some of these other commodities like coal, we had an ETF called KOL. Now, KOL actually dissolved sometime in late 2020. And surprisingly so, that was the bottom in coal price. A couple months after that ETF dissolved, coal had this huge run up, running strong all the way up until late 2022. So is the opposite true? Is the fact that Sprott is, creating all these additional ETFs for uranium, is that a sign of a top, at least in the interim? I don't think so. Sprott, is a company that that really understands this kind of the commodity space, this sector in general. They're not. I don't view Sprott in terms of momentum chasers. They're not an organization that chases the shiny object, so to speak. That's just my opinion. Let me know in the comments below. What do you think this portends to the uranium space? They have released. They've also released a lithium ETF, and I think a few others as well. I think an agribusiness ETF as well. I'm not quite sure on that one though. So let me know in the comments below what you think. Is this positive or negative for the uranium space? The fact that we have another uranium ETF to use as a vehicle. While we're on the topic of Sprott, let's go ahead and take a look at how much uranium Sprott's been gobbling up. This chart shows the market price of the Sprott Uranium Trust, the Sprott Physical Uranium Trust, otherwise known as SPUT. And here in green, you can see the share price of SPUT. But then here in yellow, you see the net asset value of their uranium holdings. And what you'll notice here is that for the better part of 2022, this green line, which tells us the share price, has been beneath the net asset value price. And why this is important is because whenever this green line is above this yellow line, that's when SPUT buys into the market to bring up its net asset value price to its market price. The fact that this green line is still down, SPUT doesn't buy in or buy more uranium to kind of align itself with that share price. And no, SPUT cannot sell uranium to bring this yellow line back down in conjunction with this green line. So, at least that's how it stands at the moment. There may come a time when the supply deficit above ground might get too tight, and some of these utility companies might end up buying from SPUT at a very high premium, mind you. There may come a time where that happens. I don't know. It may or may not happen, but that's just my opinion. And this chart kind of shows us the same thing. This is the premium to discount chart for SPUT as well. And basically, anytime this blue line goes below the 0 here, means that SPUT is selling at a discount to its net asset value. And that's basically what we saw here, what we saw in the above chart. And anytime this blue line is above the 0 mark, SPUT has to buy more uranium to catch its net asset value to the share price. And this is basically an outline or a graph illustrating the amount of total pounds of uranium held by Sprott. And as you can see here, we had the vast majority of our run in the uranium price peaking at around April of 2022. Now remember April 2022? I'll take you back to memory lane. This was right here, the peak at $64 in the uranium futures price. And if you look back here, that's basically the majority of this move up to 60 million pounds bought by Sprott. We had this violent move up, and ever since then, Sprott hasn't been buying as much uranium as it did, in this period here. So Sprott is the amount of uranium that Sprott buys is clearly correlated with the price, the futures price of uranium. And we had a pretty big spike up in uranium pounds purchased over the last week, going from 59.7 million to 60.5 million. So about 800,000 pounds of uranium taken off the spot market. Also in the news, Yellowcake PLC, another trading vehicle to take more uranium from the market. This is the result of their placing. And it says here, due to strong investor demand, the company agreed with joint book runners to increase the size of the placing to approximately $75 million from the approximately $50 million originally proposed. So they're originally planning on buying $50 million worth of physical uranium. Now they're buying $75 million instead. So now not only do we have another vehicle in place to gobble up more uranium from the spot market, they're also now buying more in the tune of $25 million more of physical uranium than they originally intended to do. And so, to kind of wrap things up here, what we have looking ahead for the week, we have this bill coming up. This is so it says here from Art Hyde, all eyes on next week's House Energy and Commerce hearings, a bill to ban Russian oil imports. While the bill includes a waiver, I believe utilities will be hard pressed to depend on it banning since 2040. Yada yada yada. Now I'm not counting on this bill to pass through to justify another, leg up in uranium. I think that's coming, whether or not this passes or not. And quite honestly, I don't think it will go through anyways, just because we haven't seen a big rally this week in the uranium price or in the uranium market in general. Usually the market will anticipate something like this coming through, and the market doesn't really believe that this bill will make much of a difference. But who knows? It could. It could. What do you guys think? Do you guys leave me a comment below? Do you think that, we will see a ban on Russian uranium in the near-term future? And what do you think is the impact to that? So that's what I got for you guys today. Be sure to subscribe to the channel if you haven't already. If you enjoy this kind of content, leave me a like. And I will see you in the next video, guys. Until next time, bye.